Welcome back to Hustle to Holdings, where we explore how people turn hustle into long-term ownership. Today's guest is someone I'm excited to learn from in real time. We're both part of the same mastermind group. While I know him as a highly successful hotel investor, I'm genuinely looking forward to hearing his full backstory and how he built his portfolio. We've had some great personal conversations around growth, leadership, and what it takes to operate at higher levels. And today we're bringing that perspective to the show. This episode is about curiosity, learning from peers, and understanding the journey behind the success. Owen, welcome to Hustle to Holdings.
Thank you for having me. This is awesome.
Where are you calling in from today?
I live in Orange County, California.
Okay, awesome. So I'm seeing a lot of hotel investors in California. Tell me a little bit about how a typical day looks like for you.
Me? Oh man, I'm up early. I like to get up when everybody else is still asleep in the house. And it works out well because then I can focus on the stuff I need to do, which is I need to work out, I need to focus on myself, and then start the phone calls because all my properties are East Coast. So getting up earlier actually works really well for me just because I can then take those calls and it's not interrupting anything that I need to prioritize in my day.
I love that. How early do you get up?
Between 4 and latest is 5.
Wow, I wish I can get up that early. I
Yeah.
slowly try to, but I get up at 6.
You gotta be in bed early, and it's like 8 o'clock. I'm like, let's go to bed.
So how would you describe what you do today?
How would I describe what I do? A lot of what I do is acquisition and underwriting. That I teach some underwriting, so I learned kind of how to do a lot of that stuff on my own, doing some commercial. We were trying to convert some buildings into larger short-term rental units. And so I learned how to do a lot of the underwriting there and then moved into hotels and just jumped right in and started underwriting a ton of stuff. And the more you underwrite, the more you understand and the quicker you could do it. So I wanted to become really efficient at it. And so I just started underwriting everything when I got started in hotels.
Let's talk about before real estate investing. What did you do?
Well, I was oddly enough a chemistry major in college, so I was always good with numbers. So that's why I kind of gravitate towards the underwriting side of things. But out of college, I moved to LA, lived there for a little while, did some fitness work out there, moved to Orange County. It's where I opened up a gym, owned that for about 12 years. And then shut that down partway through COVID, moved into health coaching. And that was like helping people solve gut issues, hormone issues, things like that around weight loss resistance and stuff. After that is when we started doing residential real estate. And we were, my wife and I, buying houses on the East Coast. We live on the West Coast, and learning how to renovate with never seen the properties in person. So we would buy them, renovate, and rent them. Did that with a couple multifamilies, never saw the properties. Then we did it with a short-term rental in Mississippi, never saw it until we're 3 months into renting it. So we did this all remotely. And that's how I learned to handle things remote rather than needing to buy things in my backyard.
That's a great perspective. I'm so curious on the gym business. So that you were there for 12 years. That means it was a great running business.
Yeah, it did really well. I enjoyed it a lot. I enjoy the camaraderie of
Yeah.
being a part of like that gym life and stuff. And so I had coaches and we ran classes, things like that, and it was fun. And then COVID happened, and in California we were shut down for 2 years, and I guess a blessing in disguise. At that time, I thought it seriously was rough because we weren't able to bring in new clients. We were able to maintain our clientele, but as a gym, you never can maintain everyone. You're always going to lose a few people here and there. We could never fill those back in. And it got to the point where it was the financial stress. And that's when I was like, you know what, I'm gonna move on to something else. And that's when I started getting into the online health coaching, just because
Okay.
they do that anywhere, and you have better retention when it comes to
Right.
that stuff.
Right. So then what introduced you in and your wife into real estate?
We always had interest in it. She's a realtor here in Orange
Oh.
County. I always liked architecture, and I think that's why I gravitate towards certain types of buildings when it comes to the purchases I've made. But we just got to a point where we're like thinking about the future, like where are we gonna, you know, get our future retirement from? And we thought, real estate's a great game. You talk to a lot of people that are seriously successful, and they all own real estate. And so we started getting into that, learning about the tax benefits, and it's just gone from there. So it's more about wealth building with real estate over anything else.
So what was your first strategy? It was, you said, was it the Burr method? You bought, renovated, and
We
refinanced,
never
but then kept.
refinanced. We would buy things, and then we'd hold on to them for a little while. We bought some things cash. We made those sort of mistakes. We've made all the mistakes everyone makes, right? Thinking it's best to like have a completely paid off property until you realize those paid off properties end up having more renovations and repairs needed, and it just doesn't make any sense. It's best to leverage banks and lending when you're doing any sort of real estate. But when you're new to the game and you're just trying to wing it, that's what happens. You make mistakes, you learn from them, and it helps you grow.
That's usually the opposite of what I hear because I use the same method. I call it the Burr method, but I never refinance because I
Yeah.
bought in 2020. Why am I going to refinance a 2% interest rate?
Well, that's it. It's unless you do it very quickly. But with hotels, that's basically our model when we do hotels, is like we're
Really?
buying something that's either distressed or not operating well. Then we come in, we renovate, we operate, and then we refinance based on the new value, which you can do in 1 to 2 years. And interest rates for commercial are going to be fairly similar. They might be a little bit less in 2 years, but that's kind of the Burr model, right?
Yeah.
And then we'll hold on to it. Ideally, we'll get investor capital back out and just operate as long as we want.
Nice. So then, once you guys did long term, when did you decide? Are you still health coaching or did you decide to quit that?
I have a handful of people. They're
Okay.
clients I've had for a while, and it just gives me something else to think about. I like solving problems, and so when you get a client that comes in, they've got something going on, they don't know what it is. The doctor says, yeah, you're completely healthy, and they can't lose weight, they don't feel good, they have no energy, like all these symptoms everybody runs into. And then I get to come in and figure out what is it. Let's solve it. Let's make you feel better. Let's optimize you so that you can get the results you want and feel good all day.
I love it. I love it. So, what introduced you from long term buy and hold rentals? When did you decide, you know what? Let me buy a hotel?
Uh, there was a little bit of a transition in there.
Okay.
Um, we had a lower income property in Cleveland, and we had a renter that they weren't good people. So we heard some stories that they were dealing drugs, and so we tried to evict them. Well, that process took a long time, and then on their way out, they decided to take everything, like hot water heaters, piping. There was holes in all the walls. Like they destroyed the place. And I decided at that time I am done with low end. I'm not doing Section 8. I don't want to touch any of this. It would just give me a bad taste. I'm like, I would much rather deal with luxury. And that's why we moved into short-term rentals. Is like, let's do higher end brands that get bigger dollars. So you're going to get similar cash flow as your Section 8. The houses appreciate where Section 8 doesn't. Like, whatever you buy for it now is usually what you're going to sell for it in 5 years. So we wanted the appreciation and also some cash flow. So we moved into short-term rentals, And that's what I was playing around with some commercial properties that we ran into some lending issues along the way. And after trying to do multi-unit short-term rentals, I pretty much was trying to create almost a hotel scenario out of a building. So rather than keep doing square peg round hole, I decided to move on and get into hotels and just find hotels that needed to be brought back to life and focus on those.
Okay. Actually, I want to go back because I just remembered a point that you mentioned. You said that sometimes it's much better to use the bank instead of paying off a property cash, which is usually the opposite of what I hear. From what I hear, it's like if you have the money, pay it off, right? And then get the income from that. And I don't have the money to pay it off, so I've always leveraged the bank. But I wanted to know, why do you say that? Why do you say, there's a reason that it's so cheap, right? I think, yeah.
So when you do that, you can own multiple properties
Yeah.
and things balance off. It's a scaling, it's a way to scale, and it's much cheaper to pay interest than it is to own it outright. You're not going to make as much. And I've just seen, from our own property, what happens. You get one, so you might have a lot of cash flow coming in because you pay off a property, and then you get, all the stuff stolen, or you get a roof damage. You lose a lot of that cash flow anyways. So if you have multiple properties, it balances things off. And so when you leverage the banks, you can have multiple properties, multiple types. Like you can have storage, you can have hotels, you can have multifamily, you can diversify, and it balances off your cash flow and your ability to scale.
Great perspective, right? And if you already have a portfolio of properties, lenders are more willing to lend to you. No?
Hmm.
Nice.
Absolutely.
That's great. Okay, so I just wanted to clarify that because I do get a lot of people just saying, "Hey, just pay it off, you'll get more cash flow." But there is, pros and cons to be able to pay it off, and it's good to measure what the pros and cons are. Now, going back into the hotel space, I did very, very similar, in which I was looking in short-term rentals, but the restrictions that I'm seeing are just too much, and I don't want to be restricted nor pay a fee to operate my business. So hotels made it, just a better move in my head as well. Tell me about your first hotel deal.
First hotel deal. I had just joined a mastermind and had been negotiating this deal with the seller for probably 6 months before I joined the mastermind. And he just didn't like my price. I was below what he and his partners were willing to take, but I knew they were overpriced. You know, after underwriting it and showing a bunch of people, like I knew the number I could do. So they had got it under contract one more time, cash offer, thought it was done. That fell through in the first 30 days. And they came back to me because their hard money loan was coming due. And they finally came to the price that I wanted. And what that was is an amount that made sense for the renovations we were going to put in. So you're always wanting to figure out where's your value add, and you want to buy it at a price where you know you can pull investor capital out. So you're always negotiating this sort of stuff. So the first deal took me 8 months from the first time I called him to the time we closed. And that was with a 3-month closing. So it was a long time. They had gone through, I think, about 4 or 5 other offers, and I kept calling, going, "You want to take this offer?" And he didn't, and then he finally did when push came to shove, and I got the price I wanted.
So what did they list it for, and what did you offer?
They listed it at $2 million. I offered 1.2 to start. We ended up at 1.5 with 100,000 seller credits, so net 1.4. So that's really where I wanted to be, because our renovations, I want to end at that 2 million. I didn't want to buy it at 2 million and then throw another 500 into it.
What type of repairs were needed? Tell me about that property.
Yeah.
It was a flip.
Anytime you find an old property, there's always more. So you get your inspection report, and we knew there were some roofs, things that needed to be done. And they get into the roof, and they're like, "Hey, by the way, we need to rip off 5 layers of roof." We're
Roof
like,
is so
"What?"
expensive already.
Yeah. So they thought it was 1 layer. Nope. They had just continued to layer roof on top, and they're like, "We can't do another layer on top." So they had to rip 4 to 5 layers of roof off 2 of our roofs and then put a whole new roof on. So that was unexpected. We have some plumbing issues. This winter we've had freezing pipes because they didn't do the PEX pipe right, and you know, so that's been a lot. But the other stuff, the renovations, isn't that bad. It's all the unexpected stuff. But once you work through a lot of that, like you get through a full season, you're going to know what's really going to happen because you're going to have updated a lot of stuff. So, the first year it's a lot of unexpected twists along the way, but it's working out well. It'll be a really cool project. We have a couple more months of renovations, and then we'll be all done and ready to go.
Okay, did you tell me about the financing of this? Did you have to raise capital? What type of loan did you get?
So we were going to banks, and we found a bank that would lend to us, and they were great. All of a sudden, 2 weeks before we closed, they let us know that they can't do the renovation costs. So we're like, oh, okay, but we can purchase the property. Remember, the seller had to get out. The hard money loan was coming due, and they were going to lose the property. So we had to move forward, and we raised capital for that and some renovation costs because we were supposed to get an 80% loan, 80% renovation costs. So we raised 700,000 for the deal. That was the money needed for carrying costs, things like that, all figured in. So it wasn't a huge raise, but the 80% leverage is really good. So we weren't having to come in with that much money. Well, when that changed, we didn't have all of our renovation money available because the bank backed out on that. So now we're filling in private money lenders along the way as we need money for renovation costs. So rather than paying interest from the time we took over the property, we've had it since June. We are waiting until now when we actually need the money. We've been using our reserves and stuff to pay off for renovation costs along the way to kind of save on some of that interest. But we're lining up the renovations, and we have PMLs at 10 to 12% annualized to get through these reno. Where we have another probably 3 months of renovation.
3 months. Okay, so you're almost there.
Almost there. Yeah, with some city stuff. Again, all the fun stuff you hear from everybody. The city dragged their feet on a couple things, so we
Yep.
were pushed back about 3 months. So we ran the property for 4.5 months. We're profitable. Pretty did almost twice what they did the year before with revenue and everything. So we were doing really well. So once we get through these renovations, we should be doing really well for the area because we're going to be probably the most updated property. And we're really unique in like the style and look of the property because it's 1940s build.
Does that qualify for historical tax credits?
No, we were just outside of that. We were
Yeah.
looking into doing some of that in previous projects, and you need a good amount of time to ramp up and apply for those because you need to, when you do it, you need to have that plan in place. It has to be approved before you start doing the work. And that's the one hang up is if you buy a property and you try to do that and you're just sitting on your hands and it's not doing anything. So we were looking at doing that in our Greensboro property, the one we just bought, but we were too far into the project, like due diligence period, that we couldn't like move into that. And we would have had to spend another 500K on renovations to meet that basis that we need to make to actually qualify for it.
Understood. Understood. Now, I want to know. So you told me while the property is going through renovations, you guys made double than what the previous owner did. Is that correct?
We had, so the first 4 months, we renovated 9 rooms and updated those. And all the other property, we didn't do anything. We used their pictures. We didn't do anything new, and we doubled what they did the year before, yes.
How? Through marketing? Like how did this happen?
They literally bottomed out how they charged people. Revenue management's a big thing. And
Okay.
so the way it was set up is they just were diving their prices at the end, not knowing that most people booked within the last 5 days. So if you just dive your prices at the end trying to gain occupancy, people are just going to hold off and then pick up the rooms really cheap. So their RevPAR was probably in the range of $20-25, and ours was almost 60 or more. So double that. And RevPAR is occupancy times revenue. And that's really what you want to look at is RevPAR is the big number when it comes to hotels.
So just to reiterate, so you at the end of the month, when you needed to increase occupancy, what you did was you lowered the pricing of
They
the
lowered
rooms.
it too much. We
They
started
did.
ours higher. Yeah.
Oh,
I kept my
okay.
prices a lot higher and kept more of a premium, seeing what everybody else in the market did. And they they weren't doing that from what I saw. And when I was underwriting and looking at their stuff, I didn't understand why it was so low. But then once I saw what they were doing with their pricing, which was just cutting it lower than anybody else, trying to pick up occupancy rather than putting a premium on it and holding that, knowing that the occupancy and demand in the area was really high during the summer, people will pay those premiums. So we were getting $200 a night for a room that they were getting 60 for.
And the occupancy stayed the
Yeah.
same as before.
Yeah. So that,
Oh.
and that's the thing is you got to know what season you're in. If it's low season, yeah, you're going to have to drop prices a lot more. But if it's high season, you want to keep those premium numbers because the demand's there. And a
Yeah.
lot of people wait until the last minute to come to these weekend destinations where they're going out to hike and things like that. And you just have to be patient and trust it. And, we would book out every weekend, every room, every night. And a lot of that came day of. So it's a lot of trust and wait. And, it happens. And just knowing that the demand in the area helps you have confidence in that.
I love that. What a great strategy. Do you use a certain platform? Like, who tracks the pricing and who changes it? Or do you have a platform or CRM system for that?
We use something called Atomize, and that helps give pricing guidance. And then I'll jump in the last few days and start making adjustments and stuff. And even with those, a lot of the AI stuff is good, but it's not great. And I think moving forward, I want to have a human more involved. I don't necessarily want that to be me because it's just more on my plate,
Hmm.
which limits how much you can do from a growth standpoint. I want to be able to oversee some of it, but be able to bring somebody on that can handle that and make sure our pacing and occupancies right as we go into each month and what's happening week of and looking further on down the road as well.
So, what is your projected, like, I think it would say gross revenue after expenses once the hotel is settled?
This one projects about 600K for
Wow.
gross and about a 50% expense ratio. So you're looking between 250 to 300 probably for NOI.
Okay, for yearly, correct?
Yep.
That's amazing. That's amazing.
Yeah,
Great job.
that's where it's projected at, and that's why I knew you had to buy it at 1.5 million. Because if you're at two, and then renovations go a little bit over, which they always do. We've run into a few things along the way that we're having to make decisions on, and you give yourself that buffer, right? And if you buy too high, that's the one thing that will really screw over any sort of deal. So really making sure you know what that price is, the maximum price you'll go to, and then you have to be able to walk away. Like that's the hardest thing is because you get so invested and you get so excited about a deal, but then you have to know what your numbers are and do they work at what you're going to buy it at. And don't be like, oh yeah, no, we'll just get better ADR. Uh-uh. I see that underwriting all the time. I'm like, who's getting a 350 ADR? Like that, come on. Those are hard to hit. And a lot of times I see that and it's like, yeah, it works if you're hit a home run, but what happens if you don't, right? And so you will always want to plan very conservative when you underwrite.
I love that. So, give me tips for underwriting and valuating a hotel. Because what I currently do right now is I put, NOA over cap. So, tell me about your tips about on underwriting a hotel.
Well, first off, whatever they're trying to sell it at is always wrong. They're
Oh, I'm
always
seeing
wrong.
that in
There is
Florida, man.
never a time that I've seen a deal come out that you're like, oh, they priced that perfect. Let's go. So understand everything you do with underwriting is to figure out how you can negotiate with them. So NOI and cap rate is how I do everything.
Okay.
Then I figure where can I take this to? So can we add more rooms? Can we add like spa amenities and get an amenity fee? Can we add food? Can you add liquor? What are the things you can do to take it from where it is to where it could be? And maybe you can move it from economy up to mid-scale or upper mid-scale. Like how does that look? What do you need? And then does it make sense? Because
Right.
a lot of times what I'm looking for is more value add stuff. And there's a place for branded, which is more of like a cash flow type play, so that's your Hiltons, Marriotts, things like that. And then there's the value add, finding that hidden gem that you want to. You need to do something to really make it what it can be. And those are the ones that we've gravitated to in our last two projects.
I love that. So, what about if, because I'm getting a lot of this as I'm looking for hotels myself, I'm looking for deals that are mom and pop sellers, right? That's what everyone advises. Find mom and pop sellers. They could be a little bit nicer when it comes to seller financing terms. Now, a lot of these off-market mom and pop sellers, a lot of the times, they don't have financials. Or they send me a text of their financials, so I don't have evidence of the financials. How do you handle those types of calculations when valuating the hotel?
You're going to come up with what you think it can do, but you're not going to pay for what it can do. It's either they have financials and it shows what it's actually doing, and that's the value, or it's the value of the building. And our first two projects were basically value of the building because they weren't operating well enough, which is a huge upside because no hotel that's run well is just the value of the building. It's always based on the operations because you can always operate and get that NOI up and it's going to be valued more than the building. So looking at like what would it cost to just buy that if it was a regular building, and then you value it off that, and maybe you negotiate between where you can get it to, and maybe you pay them a little bit of premium. If there's seller financing, you might pay them a little bit more because you can get better terms. Plus you're not going to have to go to a bank. And if you're going through a mom and pop and they don't have financials, it is very hard to go to a bank. They won't lend on something unless they have history. And you need 3 years of history. So the first project we bought had a year and a half of history. It wasn't enough, and that's why the bank wouldn't do the renovation costs. So always be careful with mom and pops that they have something, and them taking cash. Oh, we make more money. We take cash, but we don't count it. Well, we don't count it either in the value because you can't prove it. So that happens a lot is they'll bring that up and it's like, well, only what you can prove is what the bank will tell, right? That's how they're going to value it. That's how you have to value it as well.
I love that. Great advice. Now, Tell me about your second deal. I think you're
Second
working on it
deal.
now, right?
Yes, yep.
Nice.
So the second deal I found when I was visiting the first deal, probably 2 weeks into buying it, and I was just flipping through and found this building, and it just looked cool. It's a cool older building. I think it's like early 1900s, all brick, has a huge history to it. And I was like, wait, downtown 2 million? I was like, that's interesting. It should be worth more than that. It's like 22 rooms. Well, I reached out right away, threw in an LOI of like 1.8. And I was like, well, if you sell or finance the whole thing to me, I'll give you 1.9. So again, low ball, get them talking. I was the first one to get an offer in. And I immediately called the broker after I sent it and talked to him. And, he's like, I don't think they're going to take that, but I'll offer it to him. And he's like, well, he'll go down some. And he went down to 195, but he's like, we already have like 4 or 5 offers behind you. And I'm not selling you this unless you come out here. So I drive from Waynesville, which is near Asheville, to Greensboro on a Sunday. It's like 4.5 hours. Meet with this guy for 30 minutes, the owner, who's 82 and a lawyer. Sat down with him in his hotel, and then drove all the way back, all to make sure we got our deal accepted. Then a little bit of negotiation in the PSA, got the offer accepted, and then we were off and running again. And so find out this building has huge history. The Coen brothers, they were the ones that brought denim into the US, and that was where it all started. Levi Strauss got their start there. Wrangler jeans, that's the first place they bought the denim. So that building has this history to it, and it's got a couple ghosts. So a lot of
Oh,
fun.
so cool. Are you going to make it jean themed? Just thinking.
It's going to the colors are going to be around that, right? The
Okay.
blues, and there's going to be brass, and it's a really cool design that our designer and partner Naomi's doing. It's awesome. But yeah, we've got some marketing. Like it's just real cool history with this building. It's like it's been around since early 1900s, and just the number of people in and out of there is pretty amazing.
And you said this one did not qualify for the historical tax credits, right?
We could have, but we were so late in the game. Our lender they were a little bit slower in doing things, and we were trying to figure out like what we could get done, and trying to, discuss with architects, like what is the city going to allow us to do? How do we plan this out? And, our budget wasn't quite where we needed to be to hit the historic tax credits. We would have had to fluff it up by almost $500,000 to
Okay.
hit the basis, and you have to hit above the basis, which is the value of the building minus the land, and you have to go above that to get tax credits. And it would make sense, but at that time it was like, where we trying to just push more money? There's not much more in the building we can do.
Yeah.
So we avoided that for this deal.
Well, you have to get on like those ghost podcasts and like tell the history of the building and talk about maybe encounters. Things like that would be really, really cool for you
Oh, yeah.
guys.
Those the two quote unquote haunted rooms will get everything else is going to be there's 2 styles of rooms, from the color palette and everything, and then the other 2 will be very unique and offer a different experience, right? So you can rent those and come in and see if you can find a ghost.
Yeah, no, my husband would like that, but I'm a scaredy cat, so I would not like that. I'm not one of those people. But
Yeah.
anyway, tell me a little bit. Okay, so these are the 2 hotel deals. So tell me on average, you're obviously a GP on both of these deals, a general partner. You're very much involved in the underwriting process. Is that correct?
So we aren't a GP, we are managing partners.
Oh,
Both deals
okay.
are JV deals. So syndication deal has lending partners, general partners. In a JV structure, everyone's equal. We're all coming into the deal together. So there's the managing partners, which handle the day to day, and everyone else has voting rights on all major decisions. So both deals are JV partnerships over a syndication type of deal.
Okay, so does everyone put in the same amount of capital? How does that work?
No, then the equity is split based on capital provided, and then managing partners get a percentage of equity as well, but their investment is the time put into these deals. So in the second one, we went with something called fractional lending, where we used an investment club that invested in the LLC, and then we have the managing partners in the LLC. So that's how that structure is done. So we did a JV on the first one, and it's a JV structure with an investment club as part of that deal.
And do you get quarterly payouts for these deals?
You get, yep, as dividends come in, payouts will be made. All our deals have, for the cash invested, they get a pref return. So like a 7% return. So cash flow, first thing it comes in, that 7% gets paid out to the money that was invested in. So it's 500K. The first 35,000 gets paid out. After that, then it goes equity split.
Okay, great. I love that. So you're currently still raising capital for this deal, or is that
No, that
funded?
deal we are done.
Okay.
The one in Waynesville, we're doing PMLs for that. So finding people that want to give provide capital like 100K, and they get a 10 to 12% return on their money annualized. So they get a monthly payout for that. And then
Oh,
once we refi, they get all their money back. Plus, they would have gotten all those interest charges that were paid out monthly to them.
amazing. Oh my gosh, that is great. And you guys, once you refi, you keep the building. That I think that's the best strategy because a lot of people just sell it, and I wouldn't want to sell an asset like that.
No, I mean, we want to keep these for at least 7 years.
Yeah. Yeah, amazing. So tell me a little bit about the mistakes that taught you the biggest lessons when investing in hotels.
The biggest mistakes would probably be the lending side of things. We ran into a little bit of a issue with the Greensboro deal where the bank that was told us the whole time, we've got this, we're so excited, this is a done deal, backed out at the very end. And so this is like closing day. And, they were really slow about getting back to us all
Man.
week leading up to it. And then they were like, hey, we're not going to be able to do this. And we were sitting there going, we need to close. The seller wanted to close. So we made a deal with them to give us 30 days. And we were able to close in cash. So we brought in capital to get this thing closed in cash, and now we're working to refi into a different bank and get our renovation costs and get that money back out. So it's biggest mistake is trusting one bank, and then the added to that is when you raise, we try to raise for the lowest amount we need to. I would suggest raise as if you had to get bridge debt, which is more expensive,
Yeah.
lower leverage. So you might have to raise more money. But then once you get to the closing table, if things change with, like, say, a bank, that money's already raised and you don't have to worry about it. If the bank moves forward, then you're only asking less investment from your confirmed investors. So rather than trying to scramble and find more money, if something were to happen, you actually just ask your investors, hey, I know you said you could commit 500, but we only need 400 to get this thing done. They're going to be fine because they keep the same amount of equity.
Love it. And how much did you raise in those 30 days? That emergency raise?
Well, I think we raised 1.3 in, I want to say it was less than 14 days to get the deal
Wow.
done. Yeah. So That was pretty fast, but um, I wouldn't suggest trying to do that. But that was just like the bank kept not giving us like what is the amount we needed, and rather than just going, like I just said, go and just raise that higher amount. We were waiting to get that definite number. We didn't want to have to raise too much, and put too much pressure. And I would suggest just do it, try to raise as much as possible, and then not need it all rather than try to do it the other way around.
So, what tips do you have for raising capital?
Raise before you need it. So when it comes to that, just talk to people. Like have meetings, like let people know that you're going to be buying hotels so that it warms people up. So rarely do you get somebody that on your first call, they don't know that you're doing hotels and they're like, "Yeah, how much can I give you?" Nobody does, no, not many people say that. Most are like, "Well, let me think about it." Because they have to wrap their head around like this is something you're doing. And this is, a possible deal, a possible way to invest their money. And it's not something that has been approached to them. So if you've done, sat with people, had coffee with them, and then you bring them a deal, they're like, oh, yeah, you've been working on this for a while. Yeah, I know you know what you're doing, right? There's that confidence built up. And you're not going to get that if you only have 30 days to raise. It's hard to build up that sort of momentum.
Love that. That's a great tip. So just talk to people, network, socialize. One of the
Yep.
things I'm doing
Meet
is I'm
people in
utilizing
person.
in
I
person. Oh, I was about to say social media.
No, meet people in person. I mean, it's much easier. I mean, you got to do Zooms, but it's it's there's a trust that happens when you meet
That's
somebody
true.
in person over, texting them, right? So there's that trust factor and being able to see somebody and everything like that as well.
I love that. So, what surprised you the most when you entered this space?
Um, how much you rely on others. You won't take down a hotel by yourself, and you shouldn't. You need to find people to fit the things that you don't do. I do. I have great ideas for the way I want something to look, and then I meet a designer and they do it a different way, and I'm like, yeah, that's better. So it's like that's their specialty. Find people that specialize in the things that you don't. Like, when I found that first deal, I had no experience with hotels. There is nobody that's going to lend me money going, yeah, here's my money. You don't know what you're doing. So you have to partner with people that already have hotels. And that's where I met my business partner, Sujay. He'd already had hotels. He liked my idea. We partnered up and we're partnered up on the second one as well. And it's like he had that experience that I needed. Then we brought in designers because I don't design things. They do renovations as well. So you're finding people that fit that puzzle and you do it as a team. And when there's problems that come up, you think about it and problem solve as a team. There's no one person that just decides everything and just runs with it, right? That's the difference between residential and commercial is you have those people in place to handle things along the way.
Great, great. I love that. Um, that's a great point. So, speaking of like working with people, how do you know how to find the right people?
Again, get in rooms with people that are already doing what you want to do. So,
Okay.
masterminds, retreats, things like that, where people are already buying hotels and talk to them. Get on phone calls with them. Test out relationships with people, like help underwrite a deal together, start pulling things together, see who pulls their weight, see who doesn't. Those sort of things you'll never know from a conversation. Sometimes you just get thrown into things and you don't have that time to make those decisions. But going back, I 100% talk to everybody that comes into different masterminds and find out, like, hey, where can we help each other, right?
Mm.
What can I do to help you? And what do you have? Like, are you good at property management? Are you a designer? Like, where do you live? Like, if I find a hotel in that area, we need somebody local. Do you want to partner? find those things ahead of time. Again, just like the capital raising, everything is ahead of time. And too often we find a deal and then we're like, oh shit, what do we do? And it is like deer in headlights. You're like, I got a deal. Now you can't sleep because you don't know how to finish it. But when you have the people around you, they help guide you, and then you can get it done.
I love that because that's my fear. Like I'm sending out LOIs like a crazy person, but then once I get a deal, I'm like, okay, how am I going to raise capital? Who do I have to call? Like, so I guess that's my fear of starting, but I just got to get over it and just work as it goes.
Yeah, I mean, just start talking to people because you're going to need somebody with experience. You're going to need some,
Yeah.
depending on how much capital you need. You might have to have somebody that has a bigger network for raising capital because you thought you were going to get a $2 million hotel, but you found a great deal at 7 million.
Yeah.
Well, it's a deal. If it's a deal, it's a deal. You'll make it work, right? You bring in more people, so there's more people on the team when it comes to that. So, it's all about who's around you and being able to lean on others.
I love that. Tell me a little bit about how did you learn underwriting? You said you had no idea what the hotel space was. So who taught you the underwriting and how did you master it?
So, I had been doing short-term rental underwriting and helping a lot of
Okay.
people find deals. The reason I got out of the short-term rentals is people were overpaying, and it just didn't make sense. The numbers needed to pencil out, and they weren't. So then, got into that commercial space and really trying to do like complete renovations, like development type stuff, which is complicated underwriting, and learned to do that and then joined a mastermind, a hotel mastermind, and then just went to every underwriting call.
Okay.
And between each call, I would make sure I was underwriting one property a day. And then did the numbers make sense? And as you do that, you start to notice what's a good deal and what's not a good deal without even having to underwrite. You can kind of just look at things and go, that price looks really good, or no, that's a waste. You start to get eyes for that when you go through that process enough times so that you can quickly go, I'm not going to waste time on that. And then when you see something good, you know how to underwrite and you can do it efficiently. So it's just spend time doing it, make mistakes, talk to others, have people look at what you've done, and like, you got to suck up your pride a little bit and take some shots of like, that's aggressive. You really need to think about this and that. And like, you know, and when you do that enough times, you just learn how to be conservative and just make the numbers, let the numbers speak for themselves without trying to tell a story around them.
Okay, great. And I'm going to make it a goal now to underwrite one property a day. I'm not a mathematician by any means, but underwriting is so important in a deal. So I need to make that like a goal. One property a day.
And if you can't do it fast, remember the deal I got in Greensboro, I caught it when it was out in the first couple hours. I underwrote it in less than 10 minutes. And I was like, okay, this is what I can do with it. This is what I can offer. And if it takes you time to wait for a call, like an underwriting call, which is totally fine if something's been sitting for a while. But if something's fresh, you need to have confidence in how do I get this underwritten and get a legit offer in that I think I can do something with and start that negotiation. And the more you do it, the quicker you can do it.
Yeah. This whole episode so far is gold, so I'm just going to ask you a few last questions. So, what
Perfect.
do you have to say to someone who is in their hustle to holdings journey? Like, what advice do you have?
Biggest advice is, talk about what you're doing. If you're going to be doing hotels, start talking about it to everyone. It is crazy how I get referrals from people just because they hear me talking about hotels, or I met them at a party and mentioned something about hotels and they know somebody that wants to invest in something. And so people connect you. If you're not talking about it and you're sitting there and just like behind the keyboard, just underwriting, and what's going to happen is you're going to get a deal and you're going to be 5 steps too far back. right? So make sure you're communicating with people and telling everybody what you're doing.
Love it. Love it. Tell me about your morning routine. You said you work out, right? But do you have like a disciplined routine before starting work?
Yeah, first thing, feed the dogs. Second, coffee. Third is third is workout, and then fourth is I get in and figure out what I need to get done for the day, and kind of plan out the day, schedule everything. I try to at least twice a week get on and look for, things that might come up on LoopNet or Crexy that somebody has missed, and I can get a quick offer in on. I need to spend more time personally calling out to hotel owners and really kicking that up. But right now, with everything going on with two renovations, it's been a little bit challenging from a time perspective.
Yeah, that would make sense if you were like me in your hotel journey, like first hotel. That's what I'm calling hotel owners. But you need to I feel like stabilize your portfolio and then get aggressive again.
Well, I feel like you get caught if you're not pushing forward,
That's true.
then you lose that momentum.
That
And so
makes
if you
sense.
find something great, if you don't, at least you're keeping your skills.
That's true.
If I'm not underwriting something, you start forgetting things or like the tricks that you've been doing and everything that made it so efficient when you kind of put it on the back burner. So I like to keep doing that, and I probably underwrite 3, 4 different properties every week still.
Don't worry, I can send you some deals of my deals to
There you
underwrite,
go.
so you don't lose your
Let's
momentum.
go.
What books do you recommend to read?
um, One I'm reading right now and just finishing up is Never Split the Difference. It's all about negotiating. And, I read that and started thinking about how to talk to owners or brokers, because their first offer you never want to take, right? And there's a trick to throwing a lowball offer to create that negotiation, and really asking the right questions when it comes to negotiating to really find out from them what they really want and how to get the right price from them.
I love it, especially for negotiations, which is a skill in itself to negotiate. That's a very important book to read.
Yeah.
Well, thank you so much, Owen.
Thank
This
you. This was
episode is
awesome.
gold. This was awesome. Just so much high level stuff that I'm so excited for our listeners to hear. And I'm so excited for your journey into real estate investing. If you ever want to invest in the Florida area, you have a potential hotelier over here.
There we go. Let's go. Love
So
it.
if you need anything from me, you already have my number. I'm so excited to, continue following your journey. Where can people reach out to you and get more information on your deals?
Probably Instagram's the easiest. The Owen Evans. Best way to get a hold of me, just if you want to invest in any of our projects, want to be a PML, get some interest-only payments, reach out. We're always willing to partner with people, and we have a couple more projects on the way this year. So looking to meet as many people as possible.
Awesome. Again, thank you so much. I hope you have a wonderful and blessed day.
Thank you. Have a great one.
You too.